This is definitely unplanned, but I thought why not just, I show you the chart, and if you have any questions, you can ask them, and then we will address them there and then. How about that? Right. So what you see on my chart right now is a 15-second chart. This is a trading view platform, by the way. I don't trade on this, but if I don't have my 12-second chart up on the MT4, then I can use the 15-second chart on this. What you see is the setup one, the bare basic. Obviously on the MT4 we have the dot candle, we have the ATM attached, we have the eWave. So the eWave gives us wave count, which is, easier on the eyes. So right now it's probably showing a 3 here, so it will be a 3 and a 4. This is the kind of a setup that we trade, what you see on the 15-second chart. Right. And the pattern that you see right here, that's the kind of pattern that we trade. It's setup one, as you might have noticed from the books, right?
Yes.
Yeah. But what we do is that we want this pattern to appear within a certain pattern on this M1 chart. So we want to ascertain first, we want to establish that the market is moving. So the first test of the market moving is that first moment of the London Open. So I can go back to that moment for you with the trading view, because we can do the bar replay, right? So if I bring it here, that's where the market was, but correspondingly, where was the market on the M1 chart? It was somewhere around here. So here we go. I'm going to move that to there as well. And then obviously the M5 chart. So when I first get up, I'll go to the hourly chart, and I will see what's happening overall. So we know that since I think the whole of this month, it's been a bullish market, right? It kind of went down, and then just a couple of days before the election results, or the 3rd of November, it started to go up, and it has this little blip, we can see on the next day of election, kind of went down, but it looks like the results didn't really play any part on this market. It was pretty obvious, or maybe it's I don't know what it is, but that's how the markets are. They react in their own ways. The pundits and the talking heads would find links between the market and political news and all that stuff, but sometimes they coincide and sometimes they just completely shock you. They're like, I don't know what's happening. And that's normally the case. Anyway, so here on the hourly chart, you see a setup one as well. Let me just, let's not do that. So for this purpose, like for example, today when I woke up, I saw the chart. I know that the market is going up, but it hasn't moved above that level, right? So yesterday, we see that the market had a very strong range, about 350 points range, so quite volatile, but it didn't break that high, which is obviously almost the all-time high, I think. And it did go up. We had a couple of trades, not a couple, probably 3 or 4. So there was something at London Open, pretty good, and then there was something at New York Open, so the 2 times that we trade. So I'm trying to kind of give you an idea the things that I look at. So in general, I just looked at the hourly. I know it's up. It doesn't really matter which way I would trade. Even if it's an up market, I can still go short because we're trading the 1 minute and the 15-second chart, because that decision will depend on what happens right at the London Open. But what I'll do is that I will probably, I'll mark these areas. So I'll say, oh, that's a bit wrong. Hold on. So I would have marked this swing high, the box high over there. I can mark this level as well. As you can see, you have 3 levels. Are you with me, guys?
Yes, yes.
All right,
very
good.
much.
Good.
Yes, I
Please
am.
go ahead.
Right. So I can just go on with the flow. If you have any questions, meanwhile, just interrupt me. It's okay. Because it's not something planned. I'm just, just felt like talking, and there you go. So we can put this line as well. That's a bit of support resistance. Back in the days, I completely hated the idea of support and resistance. I favored only, I would say, box levels. This indicator, the AIMS box, I used to call it AIMS levels, because those are the levels that I just looked at. And if you look at these levels, it's as good as any support and resistance, because support and resistance are really subjective interpretation of the market. Some will see a level, some won't see a level, and it comes with experience. But with boxes, it's objective. It's there. It's right in front of you. A box high is a resistance. A box low is a support. Simple as that. The more boxes align, the more that level has power. But as we all know, support and resistance is not the be it and end, or whatever that expression is. It's a probability game, right? There might be a very strong support or very strong resistance levels, and it can get broken instantly, and sometimes it doesn't. But it still gives you an idea. So so I have one level here, one here, and then the next step would be, what are the levels, the pre overnight market. So for that, I will go to the M5 chart. See over here, I can see that after the midnight price, this is my range from here to here. Let me mark this with a vertical line. So it doesn't, this stuff, when I'm showing it, it feels like as if it might take a long time, but it doesn't. It's just like an instance, less than a minute, it takes. So by drawing those 2 lines, that's that black line up there, this is the other one, and we can see that the market has stayed within that range. So right at London Open over here, my first thought would be, is the market going to go up and test this up there? So that's the M5 chart we're looking at right now, right? And I would see, okay, where is price right now? So around that time, I can see that the overnight range, which was, we can count it from here or we can count it from here. So I'll use a different line for this. See, it's kind of created this zone over here. And when the market is not moving, those are the days where you will find support and resistance. That's a very important thing. But the thing is, when the market is not moving, they can be important, but it doesn't really matter to me, because my decision is that when the market is not moving, I don't trade. So if I were to trade between the ranges, then it would be very important for me to mark those ranges, mark those support and resistance, and then I would trade it accordingly. But that's not what I do, because what we want is that we want to trade momentum and volatility. So we want to see if the market is volatile and in a momentum overall from the hourly perspective. Then we want to see, what did it do yesterday? That's kind of like 10 or 20% importance. And then we want to see, the most important thing is when we go to the M1 chart. So when it was over here at the London Open. So as you can see, those lines, if I had drawn it, as you can see over here. So if you were ready, you've done that work, and right at the London Open, you might see that the market is going down on the M1 chart, right? Where is this line here? Let's move this here as well. Okay, the M5 chart. So this is how the market was overall, right at the London Open. The 15-second chart was like this, M1 was like that, M5 was like this. So from the M1 and the 15-second chart, you can probably, when you look at it, you think it's in a downtrend. For me, it wasn't, because I see this level, I see this level, I've done that work, I know where the market is as an overall. As you can see, this level proved to be as a good support and resistance level. As you can see, it's a resistance here, but then it's a support here. When it breaks it over there, comes back, retests that level, goes up, then comes back to it, chances are that it might react to it again. But even that is not the most important thing. The most important thing would be is that very moment, that first 15-second, if it was to kind of push through underneath it, if this, looking at the 15-second chart, if at that first moment at London Open it broke this level down and then created another 15-second pause or another one and then retested that level, I would be short straight away. There would be a little bit of a problem, because if you look at the M5 chart, taking a short here would mean going into this cluster. So that's not what I want. Ideally, if the market was here, see this level, which was the Frankfurt Open session, I would be very glad to actually take a trade. Actually, let me bring that. See over here? That's the Frankfurt Open. We don't trade the Frankfurt Open because Frankfurt Open is the pre-market. So just like for New York session, New York equities open at 9:30 a.m. New York. Pre-market starts at 9 o'clock. So people can trade pre-market, but the volatility is not as high as when the bell would ring. And it's the same thing for DAX. DAX has a pre-market between 7 a.m. and 8 a.m. UK. But the real volatility, the real open is at 8 o'clock, which is 9 o'clock Germany time. So if you look at this, right at the Frankfurt Open, price went up, and this was your most relevant level. It breaks it, comes back to it, gives you that pullback entry. And now you won't be trading the pullback setup, you'll be trading the setup one. But that's what I look at right at the open. So if this was to say, if it went all the way there, 30, 40 points up, then that would have clearly meant that there's a lot of volatility and there's momentum coming in. But that's just the Frankfurt Open. I don't look at Frankfurt Open like that. I'm just giving you an example that if London Open acted that way, then we would have done that. So what I look for now, I will play this chart, is the options are clear for me. I would say, okay, it has to either break that level or break this level, or if the M5 was also trending down and the M1 was trending down clearly instead of going sideways, then this would have been a nice setup one short for me. I probably would have gone short below this level. I would have put a pending order. So as you can see, I've printed those next two candles. That's the London Open. So the London Open 15-second candle, as you can see, it's hit those levels and it went up. So now I'm thinking around here is that do I actually go long? Right? So I might have gone long if this market went up with a bit more force, and then it created a clean 1, 2 to 3 candle pullback on the 15-second chart. Then I would have taken a long, at least one. That would be my low bot method, the London Open breakout trade. 1 or 2 trades can be taken on that. You won't be doing that now because you'll be looking for a setup 1. And so you will learn this pullback pattern on the M1 chart. And whenever there's so I haven't shown you that, but if you look at this M5 chart, this is a 1, 2, 3, 4 candle pullback. So when you have a pullback like this, you'd have a setup 1 on the other chart. On this occasion, as you can see, whenever I move this cursor, you'll see cursor everywhere else as well. So let me put that crosshair here. You can see this crosshair coincide with this one. So this was almost a setup one, but not quite. Oops, don't move that. So right at the London Open, if you have a setup one and your M1 chart is clearly moving, and so is the M5 clearly moving in that direction, then you would take that setup one regardless of whatever happens. For you, setup one is a setup one. For the low bot strategy, we kind of, sometimes I would bracket this range here. I'll take a long if it goes up, I'll take a short if it goes down, but that would be just 1 or 2 trades, which I would class as low bot, so that it has its own stats. This has been like tested many times. The London Open breakout. We actually ran an expert advisor for like more than a year on live accounts, and the idea was simply to set an order 5 points above the London Open price and 5 points below, and have a 20 target point on either side. Whichever triggers wins. And what I'm about to say next might not be exciting for people who don't know about probabilities and stuff, but the reality is that over a period of 12 months, the results were break even, which is phenomenal. In the trading world, if you have a robot that trades indiscriminately at a certain time at the open, and it can give you break-even results, that means that with a little bit of tweaking, you can actually turn that into a really profitable strategy. And low bot is the result of that. So if you, we found out, like, what are the things, what were the conditions when we had the most drawdown periods. And we found out that drawdowns mostly happened around the periods when generally the DAX was low volatile and there was no trend. And so low bot is literally, it has a lot of research behind it and a lot of trades, but low bot you'll have to leave until later. But every London Open, when you're looking at it, you will see how the market moves, and that will give you ideas why we trade it. So basically, the lesson 16 that we are talking about now, or was it lesson 4? Lesson 16, yeah. The pullback method, it's nothing new to me or any of the aimsters. The hunt method is basically the pullback method. We just didn't call it a pullback method. But the hunt signals are printed after 5 candle pullback. But we know that a 1 candle or 2 candle or 3 candle pullbacks are also good, like what we see here. But the main idea is that to trade only when there's nothing to the left. So with this chart, you have quite a lot to the left. See with this? So your M5 chart is inside the gator. It's not trending up. Your M1 chart, for that reason, you have a move up, move down, so it's not clear, it's sideways, and that means that it might not bring anything. And so at that time, then we look at London Open and we see if it brings volatility and price goes up. So the most important thing at London Open is that you want to see where it started from. So I'm going to put a line here. We change the line. I think we need to change the color to something bright, yellow, thicken it. This is the London Open line. At that moment, I want to see price leave this, this is the launch pad. This is where SpaceX should have their rocket over here. It should go, and then it should take a pause, right? It should where is my price? Let's have some ghost feed. It should go something like this, and then like this, and then pull back like that. This is like the chart that it's printed right now is not the type of chart that we want because it's got too many gaps, something like that. And if it continues to go like this, we would trade it. But obviously what we saw is that it did this. Let's delete that. Went up, came down. I had an order here because I'd take at least one order when there's something. So I took an order here at 08, and I was looking at it. I wanted a clean breakout. I wanted to, when there's a breakout, I wanted to just go. But it didn't, so I took a -4. That's the only trade I took. Then, if you can see here, this is a nice pullback. I could have taken this, but I wasn't entirely sure. I wasn't really clear about it. So, and that's because, you know, this was not like a strong breakout move. It didn't change. So there's this mode of the market. It moves in a certain way, and then when the volatility hits, and new orders come in, you would feel that difference. You would see it with your eyes. That didn't happen. It was like the range didn't increase. It didn't go violently up. I wasn't interested in this. So I thought, okay, I'll wait for a setup one, which means that you want, I would have waited. So at that time I called, I said, well, I would want price to break this level. Are you with me? One more time before I continue.
Yes.
Right over here, that's the level I call, right? Thank you. So let's move the chart forward. You can see market went up there. Alina at that time called and said, not around here. I think, yeah, over here. As soon as this level was broken, she called, oh, it's broke it now. And I said, no, it hasn't broken it. Because break means that it will not just poke it, it would actually go, close outside that level, and then continue. But obviously after that level, there was another level, this one. So I wanted that to clear as well. So if it had cleared those two levels, then I'd be very interested to get in that market, whichever entry mechanism that I have at my disposal. So the first thing I want to see is there volatility, and then when volatility enters the market, I want to see if the momentum continues in that direction. And usually when that happens, within first 5-10 minutes, we're done. So that's what it is. That's how we trade it. So as you can see today, it's been just rubbish. You know, there's nothing. That's not the market we want to trade. Even though if you look at this, if you isolate these candles, these 3 candles or 4, it has a nice lovely pullback. See, 1, 2, 3, 4 candle pullback. This would translate into a nice looking setup on the 15-second chart, right? Let's go to the 15-second chart. See here. So we'd go long. Doug might be long right now. I can guarantee you that. Doug, can you please confess you're long from 16? And now you paid rent? He's probably not there. Right there, you can see. You see? Can you see this price action? The way it's moved. That's the type of move I want at the London Open. I mean, not against the trend like it did, but that's the kind of move, that change in the market that we want. and then we want it to be continued for the next few minutes so we can benefit from it. So I don't think I have to explain to you why I didn't take it, because when the market is sideways, you will have these spiky moves every now and then. Not every now and then, every other second would be like this. So the reason we want markets to be clearly moving and there's nothing to the left is that when the market has nothing to the left, there are no orders to make it spike against the direction of your trade. And when the market is going sideways, inside the hood, you might see those setups kind of going on. You might see something like, oh, it's a nice lovely pattern, isolated. If you've isolated this 920 onwards, you think, oh, it's a nice lovely pullback pattern. Well, it is, but it's within a wrong market because we had lots of levels to the left. See over here. So as soon as it hit those resistance levels, it was met by some crazy sellers and price went down. So we don't want to trade this, because when the market is sideways and you try to take trades, there will be a higher probability of collecting rents as compared to good trades. So if you have any questions.
I can confirm I didn't take that trade.
I'm proud of you, boy. I think a few days ago you would have taken it.
Even yesterday.
Yeah, even yesterday, right? We had a good discussion yesterday, but I didn't record it. Oh yeah, that was a good discussion.
Are you recording this one?
I have some recording on. I don't know if it will come out correctly, but hopefully if it does, then I will share it with you guys. Yeah, I put the recorder on because I got the idea that as soon as I found out that I can hear you guys, then it becomes more fun, right? So yeah.
No, agreed.
So we'll do something like this. That's why I actually moved into Discord. We got the coders in to, kind of integrate members as well, because I was getting sick of, well, I wasn't. I mean, I had to ask somebody. But, those in Slack, there were limitations. Voice chat wasn't there. I think it's more focused on corporations and stuff. Anyway, so you see my chart right now, right? This is from yesterday. Now, yesterday the market moved very smoothly before the London Open. Now, this is the type of moves we want. So if the market, this is 7 o'clock, which means this is pre-market, Frankfurt Open. If the market is like this right at the 7 o'clock, I would be long here, if not here. Then when it pulls back, look at this beautiful pullback. 1, 2, 3 candle pullback. Now, if Derek was to ask a question, I'm assuming, like, this is not a setup one. Why do you take it? And that's the whole, it would be a long answer to that. Basically, a setup one will always have a pullback pattern on a 5-time higher time frame. And that's what we learned. And how I learned it was that we were trading the setup one. Let me bring that lovely setup one that happened somewhere. I think it was yesterday. What time did it happen, Doug? Was it over here? Yeah. Yes, I think it was something around here. But it was on the 15-second chart. So, oh man, it took me to today's date. So we go there. See this? Oh yeah, I was explaining the principle C to Doug yesterday using this very chart. So what you see here is a wave 3 down, and then a wave 4, and then we have a wave 5 here. We have this divergence. And when I was explaining this, it came out really nicely. I wish I had recorded it. And then I didn't know about the target zone 1, how perfect it was. And then I mentioned that I like to start printing my target zone 1 from where I think is the start of wave 3. So if you look at this chart, we have a nice, lovely completed wave. Let me actually print that. You start from here. That's your wave 1. That's your 2. That's your 3. That's 4. And that's your 5. So if you put target zone 1 on this, I would like to start from the start of wave 3, not wave 1. And then I will bring it down to where the peak of wave 3 is, and the third leg or the second leg would be where where is the end of wave 4. So if you look at it, target zone 1, 62%, absolutely to the point it hit it. And it's this pattern of the 1, 2, 3, 4, 5, and this higher probability event of wave 5 hitting target zone 1 is what gives setup 1 its high probability win rate, about 70% win rate, because when you take trades like this and you make your entries here and your target point is over there, you'll have about 70% wins with that particular trade management. But then the only way to ensure that you get the higher win rate is to make sure that this pattern on your current time frame, when it happens, it's also within a trending moving market overall. So when I'm going to go zoom out of this, I would want to see this market have no levels to the left. Now, granted, on this occasion it worked, and one could have taken it. There were some ideas why you would take this, and I don't want to go into that now because that would prolong it, but there were some valid reasons why you could have taken it. But as a general first point for a beginner, this was a very good setup on the 15-second chart, but when you compared it on the 1-minute chart, and let me go there now, it wasn't really the best setup, even though everything went on perfectly. You have the 1 and a 2 and a 3 and a 4 and a 5, and that is because you have those levels to the left. It's not clean and clear. Having said that, this volatility started with these two candles. So let me take you to the M5 chart, because something interesting happened on the M5 chart. You see here, this is yesterday's charts, right? We have a 3 up, a really ugly 4, and really ugly type of 5, which wasn't really clearly moving. As you can see, there are so many pullbacks in there. Not the one that we like. But it did complete a wave, and it went all the way there. And then there's an explanation on the hourly as well, that it hit levels to the right, to the left, from the day before. You know, those levels. You can see now. Is this clear to you guys?
Yes.
So if you put all of that information into it, then you'd say, oh yeah, that 15-second chart setup went down was actually a very good trade. But we won't always be able to assemble the information in this fashion that quick. This was only clear to me at the time because I knew all this information. Even then I didn't take it because I want to take trades. On the 15-second chart, I want to take a setup 1 where both M5 and M1 have an open gator and with nothing to the left. Those trades will have a higher probability of win rate. So we went into quite a lot of things, yes.
Adelina, can I have a question? Just regarding levels to the left, do you look at a certain range of candles back to see whether the levels are there, or is it just, so you're looking at the last day or the last hour or a couple of hours, or just if they're there, they're there?
Right. So welcome to the channel, by the way, Lena. You're Australian, right?
Yes, I am.
Yes. Right. So, yeah, this is an interesting thing. Levels to the left confusing a lot of people, but so I've printed those levels even earlier in this presentation or today's talk, there are three types of levels that we want to look at. In general, we have from the hourly chart, the one that we saw and we printed them. So that's just as a support and resistance levels. But to put it simply, levels to the left would mean anything on the left of the current price. So like right now, here is where price is. What are my levels to the left? Well, you can see there are quite a lot of them. Why? Because price is stuck in a range. So we have this level, we have this level, we have this level. Any level to the left of your price immediately. So the closer it is time-wise on the x-axis would have more value to you. The further away it is on the x-axis, the less value it has, but then it gains more value if there is more interaction at that level. So for example, here is price right now, and we have levels to the left over here, and we have levels to the left over here. Those are the most relevant levels for me. But if I look at the chart overall, the most important levels today are actually the range high. So once I've established that the market's in a range, then there's only two levels for me. Does it make sense? Like when I've established that the market is range bound, there are two most important levels for me, which would be the high of the range and the low of the range. So this market has several levels at the bottom. So if I zoom out, I can see that these are my levels. Oh. So this is the overall range. I would delete that one now. Let me just empty all of those. So suppose I've marked my levels from the yesterday's high. There's actually a video on this, and there's a lesson on this as well, right?
Okay.
So let me just quickly find that to just reference it. Yeah, I think in the Lobot course, there's I think a couple of videos on levels, and one of the video actually shows you exactly how to print those levels. I kind of mentioned them today as well. But the most important thing is those immediate levels. So if I'm trading the M1 chart, and let's say it's a setup 1, let's go back to this chart. Oh, okay. So let's look at this chart right over here.
Yeah.
So when the market was here, my levels to the left was this one and this one.
Mm-hmm.
These are my most important levels. So what I want to establish is that suppose the 5 times higher time frame was giving me the indication to go long. Market is clear, momentum is clear. I'm going long here. My first thought would be, is there enough distance between my entry and this level that if it were to bounce against it, that I've managed to, managed to bring my stop loss to break even. So if it was to fail there, turn around, hit my stop loss, I won't lose, because that's the most important thing, isn't it? We don't want to lose.
So you want one. So you want 1R there.
Yes, 1 hour distance. Yeah, it's a nice one. Yeah. So
Okay.
if there was 1 hour distance, I would say, okay, I'll take it and see what happens. Although this is not a setup 1. I mean, that's not what I'm saying. I mean, because the purple is inside, so we won't take this one. Suppose it was a setup 1. Suppose this purple was correct and all that. And when it clears that level, nothing to worry about. After that, what I'm seeing is nothing to the left. On this time frame, there is nothing to the left. Can you see this empty void, let's call it, all of that, right? That is the most important thing from when I say nothing to the left. Basically, a clearly trending market. So How the hell am I going to delete that now? Well, it won't delete itself. Never mind.
That looks pretty.
Okay, we'll figure it out. Anyway, so that's what I mean by level to the left. So, and then again, so when the market went down, and then if I was going to go long over here, I know that in general there is nothing to the left, but now that the price has gone up, I have these levels to the left that I have created. You know, like I consider this as my price action, right? And now I would want, these are my two levels now. So as you can see, it would have paid for you. So this is London Open yesterday. And I'm thinking, okay, is it going to, you know, break those levels? What is it going to do over there? It comes here, you go long, you have enough distance between your entry and that point to make some profit. So you went in, it reacted to it, you got out. Price went back to those levels, then started going up, and then there was that question again. Here's my level, these two levels, and then here's my level, these two levels. So now it's a double level, right? So this was one, the peak of 3, and then because it reacted to it, it has more importance now, because I know that there are sellers sitting there, or buyers run out of steam around that level. So it comes down, it goes back up, it proves itself to me that it was a fake out. And Doug, if you remember, this was that B trap that we saw over here, and that was then followed by strong selling. The selling was so strong that it actually broke this range. So if you look at it, this bit turned into a range. So for that moment, this was the range, and the most important levels for that range was this level and this level. So when the market is around this range like this, I tell myself, okay, and this is what we do. You'll hear us say, Dave would say, Doug would say, we put an alert here, an alert here. We let the platforms, we set an alert to say, okay, if it breaks this level, prompt me so I can look at the market, because I want to see if it's broken, and then I would analyze how it's broken it. Has it broken it with strength? Is it going up? Then I would look at the market. So it broke it, like over here, you'd get your alert, but not much follow through after that. See, price just went back into that levels, and then it just continues sideways. And if you look at it further, all the way till New York time, which is that 2:30 p.m. UK, it just stayed. So I can extend this, and as you can see, market actually stayed within that range. So as long as it stayed within that range, I wasn't interested. When it broke over here, I was interested to go long, because again the situation was, if you look at it over here, this is New York Open, this here, but I have this immediate level to the left. But if I take my entry over here, I know there's enough distance, right?
Yeah, makes sense.
And then it goes up and creates another range. I remember very well, it was yesterday. So when it created this range, then that micro range became my target. I was like, okay, if price stays with this range, with this range, I'm not interested. Then went up, tested that level. Can you see these two candle pullback? Pulled back, retested the high. I was long here. I went long on this. And I took this, and then it pulled back again. Now there's nothing to the left, as you can see. Let me bring that evil pen again. You won't know how to delete it. So there's nothing to the left. It's all clear. I go long, it goes up, and then it was met by something. And you can see those two candles are quite different to the other candles. This indicates that strong selling has started, which turned out to be the wave 1 down, followed by a 2 up and a 3 down. Obviously at that time we didn't know, but it proved itself over here. that this was actually a 1, 2, 3, and a 4, 5. So Doug saw this as an opportunity. He took a trade here. So whenever you have these 3 or 4 clean pullbacks, so you have a clean move, creates a new peak, price pulls back to green. Underneath it, on the 5 times lower time frame, you'll have a setup 1. And this is your hunt pattern. See a new peak and then dark bars. That's the hunt pattern. And this is your cherry. This candle is your cherry, because cherry is the confirmation. So with the pullback method, you have 2 ways to get in. Actually 3 ways to get in, but let's call it 2. One, you want to see the pullback, and then you would just go below the low for a bearish market, the low of the pullback candle. So in this case, it will be this one. And the other way is that you want to only trade when you have a confirmation candle. In this case, you have a confirmation candle because this is a bearish candle. It's a bearish reversal candle. So if it was a pin bar, if it was an outside candle, it would be even more stronger for you to say, okay, the price is resuming now. And the other way is to kind of predict and get even a tighter stop loss by getting in somewhere in here. Like as soon as it touches the 10 EMA or the green line, you get in. But that will bring more rents. But when the winners come, they will be bigger. So that's a third way of doing it. I sometimes do that. Most of the time it's this. So trading a setup 1 on the current time frame is actually a pullback of the 5 times higher time frame. So you have 2 patterns at your disposal, whichever you like most. Like some people like pullback, other people would like to sit and watch a setup 1, and I kind of do both. So that's what it is.
So if you're using the pullback, that one example you've got there, are you just waiting until you see that red candle before you put an order in, or are you kind of trailing your order up with the lows of the candle?
You mean the trade management? So after I enter?
Yeah. No. To put your order in.
I don't know. I lost the question. Sorry. Could you repeat that? I went in my thought somehow.
So once you see the pullback happening, so there's that first pin bar. So you've got the low where the 3 is,
right?
And then you've got the pin bar going back up in the pullback.
Right.
Are you waiting until you get that red candle before you put an order in, or are you?
Yeah, that's what I meant.
Under the pin bar and moving it backward.
That's what I meant when I said there are 3 kind of ways of entering. So one would be to, let's say, you have established now that it is a pullback. So after a second candle at least, you know it's a pullback. So if you look at this one, these 2 candles, right, it's also a pullback. So as soon as this candle closes, you have these 3 options now. You'd say, okay, I will go short below the low of this candle, the latest pullback candle. I will go below the low. So this is a breakout in the direction of a trend. That's what you're doing.
Yeah.
Or the second way of saying would be that I will wait for a confirmation candle, which in this case did not happen. So you would not have an entry. But in this case, it happened. So you have a pullback. If you were interested, after the second pullback, you would have your pending order here. But then this one printed a higher low, so you would delete that one or move it over there. This one is almost the same, so you'll keep it there. And then this one, even if it was a green candle, your pending order will be below this one. But if your idea of entering is, or if you choose to say, okay, I'm only going to take entries when I have a confirmation candle or resumption of trend. Confirmation would be a resumption of trend. See, this is a bearish candle. So for a bear market, when you have bull candles, it will be followed by a bear candle. Only then I would go, then your entry would be below this one. Whereas the third method would be that as soon as when the market closes near the green line, I would actually enter with, let's say, 10 or 15 pip stop loss. So technically, if it starts to go further up towards the red line, you'll get out because you think, okay, this is not a pullback anymore. So this would be more subjective for you, not recommended at all. Probably when you're like experienced or you feel like doing it. You can monitor it.
I don't think I can make a decision quick enough.
Yeah,
yet.
so that's that. And then, so the benefit of that is that when you get it right, your risk would usually be very, very small, about 4 or 5 points. So imagine if you had this epiphany or the idea around that time that when it hits those levels, I'm going to go short. So suppose you went short at 75 and then you trail your candles, or you had your target zone 1 printed there, you could have traded all the way to 26. So you probably got about 50 points from this with a 5-point risk. So technically you have a 1:10 trade from that within two minutes. So that makes it very, very powerful. But at the
one more question.
Mm-hmm.
So with the previous pullback, not the one we've just been looking about, but the little one.
Oh, this one.
Yeah, that one there. That one doesn't have a change in colour of the on the waves. Is that something that you consider?
That's the
anymore,
that's the difference between hunt and the new pullback method. So the hunt method waits for at least one dark bar.
Yep.
And then the hunt method also waits for a confirmation candle. So the hunt is it's different from the low bot or the pullback method, and that's why we call it H2O, Hunt 2.0, because the hunt was more restricting. It's good for beginners and it's a good method, but it waits for at least 3 to 4 candles because AO is, it's the difference between 5 and 34 MA moving average. So it takes about 5 candles to change its direction. It changes color. So hunt would usually be, as you can see, 1, 2, 3, 4. Over here is about 4 candles, or even 5. But by the third candle, you're beginning to see the red peak. The histogram changes color, and that's when you would consider the hunt. And with the hunt method, you don't only look for pullback, you look for a pullback and then a confirmation candle. So this would be your cherry signal, which would be calculated by hunt, the cherry indicator for you on the MT4. But the hunt 2.0, slightly advanced, does not wait for. Instead, it actually prefers that your AO is red for shorts and light green for longs. So it would go with up to 5 pullback candles. Hunt 2.0 is that. Sometimes there will be a dark bar in there, but we don't worry about that. And the reason, and the fact that we don't worry about it, and we don't do the wave count and stuff, that's why we simplify it and we use this template. But this template assumes that all the stuff that I talked about today, earlier, that you're very good at that you're already doing all that you already understand the target zone 1, the setup 1, this interaction between setup 1 and the pullback and all that. So if you do all that, it's already at the back of your head. Visually, it's not there, but you understand the concept. So if you understand that concept, that means that you actually understand how the market moves. So these indicators, this pattern that we've created, the setup 1 and all that, it teaches you how the market moves because it's in line with it. So I would say there are 2 ways of doing it. Either start right at this and then incorporate all that, or start from setup 1 and get good at setup 1, because when you get good at setup 1, everything will make sense.
Yeah. I did start with setup 1. I just found that I tended to get in too soon because I was impatient. So I kind of like the pullback method because
it's cleaner.
It's easier to see. Yeah.
See, this is like a clean shot, whereas well, this is not a clean shot, but a lot of people would need this assistance from indicators to create the pattern for them. But I would say that as long as you understand that,
I have put boxes back on my chart. So I'm using this chart, but I have put boxes back on.
Yeah, box makes a lot of sense because box clears, it shows you those levels, the most important levels for you.
Yep. Cool. Thank you.
So yeah, you're welcome. It was lovely to talk to you guys. Anything else?
Yeah, I've got one. Pullbacks, like the little mini one you showed first, that was quite far away from the MAs. You'd still take them, would you?
Which one?
You know the ones you were going through earlier. There was one that was a hunt method, pulled right back to the MA. Then you got the confirmation candle, and then you did the smaller one before that, which was quite a long way away from the MAs. And I was just wondering about those reliability of it, if it's not gone back very far.
Right, is it this one that you see on the chart? Is somewhere here? Give me the time.
It was the one you were just showing to Amana.
This one.
No, I don't.
Yeah, it's that one there, Amy, just next to the 4.
Just before that.
This one.
Little one. Yeah.
Yeah. If you remember, Doug, yesterday we were going through that talk when I was telling you not to trade, and you traded it. Do you remember that?
Oh, I thought it was.
That's that same chart.
No, I don't
You
think
didn't
so.
trade this one. You traded this one.
Right, I did trade that
Yeah.
one. Yeah.
Because this created a nice setup one on the 15-second chart. Do you want to see that? Let's go there. Okay. Actually, let's change this setting. So if you do this time, and then you click on that, everything will shift to that time. See over here? This chart. Let's just make it 2 charts for now. So here we go. My fantastic drawing. Let's delete that. Change that to 15-second. Not this one. Let's change that to M1. We'll change this to 15-second. And this is yesterday. Yes. That's the one. Okay. See this now. Let's get rid of that. This. So you traded this pullback. So when you have the hunt pattern, which is the new peak and dark, then a pullback and dark bars, and you have about at least 3 candle pullback up to like 7, and you have a confirmation candle and stuff, this turns into a setup 1 on the 5 times lower time frame. Whereas when we were looking at this chart, if I mark it, actually just move this mark over there, you don't really have any relevant pattern on the 5 times lower time frame, right? But I'm still trading this because this is a 2 candle pullback. So
Right. Okay. Yeah.
the thing is that when you have 1 candle up to 3 candle pullback, then the fractal geometry is not 1:1. It's not just 1 to 5. It's 1 to 10, because that comes under the pattern of Waltz pattern. So basically a 1 to 2, maximum 3 candle pullback is basically a setup 1 of a 10 times lower time frame. And I might be able to prove that to you by going to, I don't know if I would get the feed, because yesterday I was able to do that. But let's see if we go there. So I will go to the 5-second chart and see if I can actually pick it. Oh yeah, they still have it. So here you go. It's not very pretty, but you can say it's a setup 1. See this? We have a 3, we have a 4, we have a trade. It's this. So a 2 candle pullback or a 1 candle pullback is a 10x pattern. And that's what I mean when I say Waltz is a 10x pattern, Hunt is a 5x pattern. Does it make sense?
Yeah. Yeah.
So the reason I take 1, 2 to 3 candle pullbacks, and I call it the new pullback method, or Hunt 2.0, is that it incorporates this concept that I'm still trading a setup 1 of a certain degree.
Yeah, I think more. I get what I was kind of getting at is you don't wait for them to go back close to the MA, as in that example. It's
yeah, actually, with the Waltz pattern, it's a good question actually. We want more like a pause. We don't want a proper pullback, like what you see with this. It's a pause. If you look at it, I know it's a bit away from the MAs, but the proper way of looking at it would be with the low bot. I'm going to delete the drawings to clarify it. Now I'm assuming that there's nothing to the left, right? We're assuming there's nothing to the left. So let's talk about this one, right? This is not away from MA. We've discussed this before. We had quite a lot of other reasons, right? Mm-hmm. It was the New York Open. It created a sideways market. It breaks it here. It pulls back to it. So that adds that extra value to it. The other more important thing is that it's just a recent breakout. You see, a very recent breakout off the range. So these two candles created a similar kind of pattern, but as you can see, it's touched the green line as well, the 10 EMA as well. So it has two major advantages over this one. That, well, actually three, because one, it's a valid setup because there's nothing to the left. Most important thing, it was in a range, it broke out. The other thing, it's a retest of the range. That makes it even better. And another thing is that it's the most recent, the first pullback. That's what makes it the best one. So it's the first pullback. This one is the second pullback. We won't go for the third pullback on the M1 chart, right? Now assuming that you either know a very good reason why you're going short, which I discussed a little bit earlier, like, you know, the H1 chart was hitting the levels to the left, the M5 chart had hit target zone 1, blah, blah, blah. You were going for some reversal. And the most important thing is that you see that price clearly had momentum. So let's assume you knew that and that's why you were trading it. Then these two candles, these two pullback candles or pause candles did create an opportunity for you. But the reason I didn't take it is because of these levels to the left. That creates confusion in my head. You know, is it going to be a reversal from here? So I cannot trust a pullback if it's hit a support or resistance level. Because then the question is it a pullback or is it a reversal? Right?
Yeah.
And then when you see this over here, again, it hits those levels. Now, at this moment, I'm not assuming that there's nothing to the left. I'm just going through that scenario again. So I can see that the market has hit those levels, the levels that were giving me headache earlier during the day, and it's reacted to it, and then it's hit those levels again. Is this really a pullback? Which turns out to be a pullback. It was a really nice pullback. But at that time, my decision was difficult. Is it a pullback? Or is it going to be like a reversal and then it's going to go up? You know, like in range, when it hits the range low, it reverses and starts going up. So that's why the levels to the left creates a problem for me, because then I'm not clear whether it's a bounce off that level, reversal, is price going to now go up and test those levels? And literally, these were my thoughts around that time. It's like, you see, okay, this is the support resistance level that's created. Price bounced against those levels. Most probably it's going to come here now, and we'll see what happens. But instead it went down. So if you took the trade, having all of this in your mind, that's fine. But if you remember, Doug, I said, is that the more, even though this one worked, more of these will not work over a course of the longer period.
Time,
yes.
Yeah.
Whereas if this was to happen and there was nothing to the left, more of those will work compared to the ones that don't work. on the longer term. So if you took 100 of these with levels to the left and 100 of these with no levels to the left, the ones with no levels to the left will give you a 70% win rate, whereas the one with levels to the left will probably give you about 40% win rate. And 40 is not enough unless you go for 1:5s, which is literally impossible in range bound markets. So yeah, there's that's that. What else can I say? Today's the market is very rubbish, and it's 10 o'clock. Time's up, and I spoke for 1 hour. That would make a nice video if it's recorded properly.
That helped me understand so much. Yeah, thank you so much.
You're welcome, Onish. You have a good one.
Yeah.
There was a slight glitch in the
you.
morning. I think some people were not able to log in or something like that. But everyone, please make sure you go to dashboard and make sure the Discord link shows as linked, so that in future it doesn't kick you out. See, in your
Mine does.
when you go to dashboard, on the top left you'll see that home icon. That's dashboard, and there you'll see the link your Discord. So when it's linked, there's going to be a cross next to it. Don't hit that cross though, because if you hit the cross, that means disconnect it. But you can connect it again. So every time if it's connected, it actually looks at your membership to see which level membership you have in AIMS, and then it feeds that information to Discord automatically. Automation is the name of the game. There you go. Discord died on me. Well, that was earlier, I think.
Yeah.
Excellent explanation. Thank you so much.
You're welcome, Monish. Lovely to speak to you, Alina. I think it died on Derek because he disappeared.
Yeah, it died on me too. It just went.
Right. Hope to catch you soon then. Again, we probably have another
Thank you.
live
Have a
session.
good day.
You too. Bye now.